What's your name? Okay, Lemon Folk.
Yes.
Okay, Barry.
Nice to meet you.
Nice to meet you. Are you new?
I'm new.
That's okay.
Yeah.
Groovy Nomad.
Yeah, that's where we stayed.
That's what?
We went to Macklemore
Oh,
North,
okay.
and we stayed at this little motel, and they renovated nature into different themes.
Ah.
Probably you know that we were the Pac-Man, right?
That's cool.
Had a Pac-Man game.
Really?
Oh, that's
Yeah.
neat.
That's kind of cool.
It was fun. And like the Elvis room, the barn.
Wow. Everybody must be coming together. That's why. Not here. Usually a vet comes to this at least once a year.
I'm only getting this preview because it won't download. So just hit that little arrow to get to the next one.
Okay.
I'll go ahead and share the screen.
Okay. It's kind of small, but okay. Go to the just do me a favor. Yeah, go ahead and share it and then just tell me what I'm doing.
Yeah, just you'll see.
Okay.
Just hit the arrows to the next page.
So here you are. Thank you. And then we have 2 people on I see. What's that? You're welcome. Can you hear me? Angela, Fatima?
Yes.
Okay, thank you. I have a handout.
I will come down to get it. I have a meeting that I need to leave early for, so I figured instead of leaving your class, I'll just hop on Zoom.
Okay, that's fine.
And Barry, I'll collect it from you when I'm in office tomorrow.
Okay, that's fine.
Thank you.
You're welcome. We'll start in a minute. My class is getting less and less in demand.
Well, I think there's a big push for, just this week they sent out that October push where there's the scavenger hunt and generating leads.
Yes.
A big push for generating leads, so I think maybe everybody's like.
Yeah, that's where they are.
I think they're on a big generating leads hunt.
Yeah, that's what they
I'm
must be
thinking.
doing.
That's what I'm thinking. It's in
Yeah,
the
they
back
must
of my
all
head.
be doing lead generation. I've been doing this long enough to know that. What time is it? It's 11:01. I'll just wait for Angela, and then we'll start in a minute. What did they say this
And
class?
plus it's Monday.
That's right, and a new month.
It's Monday and everybody's back from fall break. Fall break was last week.
That's right. It's a nice day out and it's sunny and all that.
Yeah, it's all.
What did they market this as?
I'm just looking on here to see what I have on my calendar.
Okay.
I just set up your finances, I think.
Okay, that's close enough.
I can look and see exactly.
Nah,
what
it's
it
okay.
is.
That's all right. There you go. I put it right there for you.
Yes. How to
I'm gonna
set
grab
up,
one for class myself.
Okay.
set set up your finances as an agent.
Thank you.
You're welcome. Okay, well, we're gonna talk about that. All right, we'll give Angela a minute to get back to her place, and then we'll start. So, you can unmute yourself if you want, because you can make this interactive or whatever you want to do. So I think we got a couple of people on, Brian, Allison, Fatima, and Angela. And then Lynn has joined me, so I'm not by myself. All right. We're just gonna talk about kind of like basic business finances and how to set things up. Kind of a checklist. All right, so like I said, you can unmute yourself if you want, or because I want to ask some questions. So who here has no setup, nothing set up, kind of like from a business standpoint of organizing your business finances?
Me,
Okay, you got to say who you are, but I see Fatima.
yes.
Okay, all right. Anybody else has got nothing? Allison, I see you trying to say something. I'm good to go.
No, I just unmuted, but I do have a setup, so I didn't answer.
All right. So we're gonna start here. So the first thing is, I think it's pretty basic. You need to have a business checking account. Okay? Even if you're starting off and you're a new agent, right? You want to start not only getting in the habit, but also from a business standpoint, you want to separate your business from your personal, right? I mean, if you're married, you have a joint checking account or something like that. You don't want to be putting your commissions into all that because it's just going to get commingled with everything else going on in your world. Okay?
Mm-hmm.
So the first thing you need to do is you go to any bank. I think you should go to the major banks because they have good apps, right? And you want to be able to manage your finances from a, if you go to a local bank, you may not be able to do that. You may have to go in there to do things. We deposit all of our checks electronically through the phone. I try never to go to the bank, and I think I don't even have to go there maybe more than once a year. So you want to set up a business checking. And ideally, you'd like to have a business savings because you'd like to actually have some money set aside, okay? All right. Now, as you start to earn money, in the beginning, you may actually not even make a profit because you may have revenue, commission, and you'll have expenses, and your bottom line may be minimal or even negative. But you still want to have those accounts, okay? Now, at some point, when you start making some money, you need to start saving some money. Now, what's the thing we have to pay every year?
Taxes.
Taxes, exactly. So you have two choices. You can save for your taxes or you can scramble for your taxes, okay? So my philosophy, and we'll get into some strategies and stuff in a minute, is if you're in Georgia, just taking a middle income type of tax rate, which is 24% federal. You might be less, but you might be more. And then Georgia has a 6% state tax. I would take 30% of whatever commissions you earn, and the first thing I would do is move them over to that checking, that savings account for taxes. Now, at the end of, depending on how your business is set up, and we'll talk a little bit about it, whether you're a corporation or individual, once you do your taxes, you might be able to move some of that back. But 30% is a good number to be estimated, okay? Everybody make sense? We're good?
Mm-hmm.
Okay, so we have commission. The first thing that comes off of the commission, right? Or actually, the first thing that comes off of the commission is your expenses, if you know what they are. So that would be your KW fees, that would be your super fees, that would be your annual dues, and whatever else business-wise, and we'll get into how to track that you have for that given month. So let's say you made $5,000 in commission, and you had $1,000 in expenses, you'd have $4,000 profit, right? 1/3, 30%, $1,200 would go over to the savings account. And that would leave you with $2,800 profit, okay, for your, whatever you do with your money. Now, at some point when you're making money, my advice, and you get a sense of how much your expenses are on a monthly basis, in that example, it's $1,000. I might move $1,000 over to savings, so I have a month's of savings saved, reserved. You should really try to work your way up to at least have 3 months minimum. So in my example, you want to have $3,000 in that savings account that's earmarked just for monthly expenses, because there are months when you don't necessarily make enough or any money, but the bills still come. Okay? Now, once you do that and you start to run through that on a regular basis, you'll have, you know, you won't be under stress to go, oh no, I didn't have a commission this month, I gotta pay my bills, what do I do? And you don't want to be borrowing for your personal side. If you can avoid it, that just gets a little bit thick. I would also get, and again, you talk to the bank, a business credit card. They'll give you a debit card with a checking account, I think. But I would get a business credit card. All your expenses should be paid by the business credit card. This will help you from an accounting standpoint, and it just also makes life easier rather than you going through your personal Visa or Amex and trying to figure out what was this and what was that. Because I can promise you, you'll never remember. Make sense? Anybody have any questions so far?
No.
Excellent.
Can't you do the same with your debit card?
Well, your debit card
Or
will
just
automatically
strictly for
take out
business?
of your checking account. So, you know, if you go and you buy lunch for somebody and you pay with your debit card, which I wouldn't do, I would use it on my credit card. But if you paid with your debit card, you know, it'll show up in your bank account as a, you know, my friend's place or Chili's lunch. Yeah, and you just got to remember who you did it with. Okay? Now, who here is using some sort of accounting program? Is anybody using an accounting program?
I use QuickBooks.
Who's that?
QuickBooks.
Allison.
Okay, Allison uses QuickBooks. Who else uses QuickBooks?
Angela.
Angela, okay. So use QuickBooks. QuickBooks is kind of like the super daddy. It's much more than you need, but if you're using it and you're comfortable with it, that's fine. I use Quicken, which is the simplified version from QuickBooks, okay? Because you know, QuickBooks is where you can do invoicing and all this other stuff, which you don't need. If you're paying for it online, as opposed to having the program, you might want to look at going to Quicken. It might be cheaper. If you've got the program and you pay for it, then, and whatever works for you, you know, don't use Excel. Anybody using Excel? No.
Me.
There's one. Don't use Excel.
Got it.
One mistake in your formula, your life is ruined. Right? You forget to include that expense, and at the end of the year, your CPA says, why haven't you paid enough in taxes? And you're like, because I didn't take that line item out. Don't use Excel. Excel is awesome for a lot of things. Don't use Excel. Okay? You can get Quicken online for, who's that? You can get Quicken online a year. It's like $50, $60. Use your credit card. It's a business expense. And when you do that, you can tie your bank account to Quicken. I thought I could set it up and show you this, but my computer won't connect to this. So we're going to use just still shots. But you can, what I do is I do it a lot of times a month, but once a week or once a month, you can go and just hit the connect button. It will download all your transactions into the program. You can just make sure they're assigned to the right categories, and you don't have to do any data entry or very minimal. Okay? And it will run all the stuff you need to run. Now, how often should you be looking at your business P&L. Right.
Every month.
Well, monthly minimally, I like to look at it about every 20 minutes, but it doesn't really change. Now I look at it after every commission, just making sure, because I'm looking towards the, like, so today's the 2nd, right? So we just finished a month and a quarter. So we got paid on, we had our last commission check on Friday. I processed it, paid myself, you know, and, you know, I'm looking at how does the month look? What did I do? What was the quarter like? And then I have to figure out my taxes and stuff like that. Now, I'm just looking through my notes here. Okay, so a couple of you have Quicken or QuickBooks. One of you is using Excel, which is you're not going to do anymore. Who here does not have a CPA? If you don't have a CPA, say your name. Oh, good.
Lynn.
Okay, that's fine. So you want to get a CPA, right? You don't necessarily have to run out the door after this class, but you need a good accountant who understands our business. You want somebody who specializes or is familiar, preferably with real estate or our kind of businesses, but small businesses, right? You don't want a guy who just, or girl, who just punches out 1040 forms, because you need to have somebody. Okay. Who here is a corporation? If you're a corporation, say your name.
Angela,
Fatima, Allison, Catherine, you're not corporations?
I have an
I'm
LLC.
Okay, we'll talk about that in a second. Allison, Catherine?
I have
I'm
an
s-
LLC.
Okay. All right, I'm standing up. This is important. All right, let's talk for a second. An LLC is a limited liability corporation, but it doesn't make you, first off, the limited liability is probably very minimal, but it's okay to have an LLC, but you have to elect to make it an S corporation. Who is not an S corp?
Me. Fatima.
Okay.
Allison, I'm sole proprietor.
Okay, sole proprietor is the most painful way you can do this.
Okay, help me.
All right, yeah, it is, you're gonna pay the most taxes and you're getting no benefit of being incorporated. And you're probably not incorporated. You have an LLC that really means nothing. So follow me on this. We'll get into some examples in a minute. I'm just checking notes here. All right. Now, let me stop by saying I'm not an accountant, I'm not a CPA. This is not financial advice. I'm telling you what I do. Please check with all your grand poobahs and experts that you need to for your own personal situation. However, I can tell you, when you are a sole proprietor, every dollar you earn, okay, comes in and you pay tax on every dollar. Okay, because it comes in like you are it's regular income. Okay. When you are a corporation, you are allowed to do some things. And when you're an S corporation, okay, you're allowed to separate your income into payroll and other. Now, and here's the thing, if you are in a 25% tax bracket and you make $100,000 and you're a sole proprietor, okay, every dollar of that income is going to be taxed at that whatever your income rate is. All right, 25-30%. When you're an S corp, and I'll show you an example on the screen. When you're an S corp, right, you can pay yourself a salary, a portion, and you can pay yourself a dividend on the other side. And by doing that, you're going to reduce, because if you're following a sole proprietor business, every dollar of that income is considered salary. And when everybody here probably at one point had a job, and what are the things that come out of your check on a job?
Taxes.
Well, yes, but what special taxes? What's the thing that every new kid who comes home with his first check goes and says, who's FICA?
FICA.
Right? Who's FICA? And why are they taking my money? Because you have to pay FICA, Social Security, and that's 15.2% of every payroll dollar. Now, when you work for a company, they pay half and you pay half. When you work for yourself, you pay half and you pay the other half. Because you're the employer. Does that make sense?
Mm-hmm.
Okay. So you pay 15% payroll on top of the 25% income tax. All right. If you're not sure what you are, you go to the Secretary of State website, just type in Georgia Secretary of State, there's a link for corporations, and search for yours. And if it doesn't come up, you're not one. If it does come up, check and see to make sure you are an S Corp. Check with your tax advisor on this, okay?
What's
Yes,
the name of the website again, Barry? Georgia?
Georgia Secretary of State.
Okay, thank you.
Yep, just Google it. Now, when you register as a corporation in Georgia, you are not automatically set up as an S. You have to elect an S option. That's why I'm saying you can say, well, I went and got a corporation, but I never filed to be an S Corp, and so you're not getting that benefit. All right. Now let me show you. Can y'all see? Can you all see this?
Yeah.
Okay. So on the left side, let's start on the right side. You make $100,000 in gross commission. You have $20,000 in expenses. You have an $80,000 profit. Okay?
Mm-hmm.
Then, because you're not a corporation, you're a sole proprietor, an LLC that's not elected, you have 100% of that $80,000 as salary. You have to pay 15% on that as payroll tax. That leaves you with $68,000 before you have to pay your income taxes. Let's say that would be another 30%, just to use that number. That would be roughly $20,000. You would have made $48,000 after taxes. Does everybody follow that?
Mm-hmm.
On the left side, okay, you're an S Corp. I have $100,000 in GCI. I spent $20,000. I made $80,000 profit. But of that $80,000, I'm only going to pay myself 40% of that as salary. So 40% of the 80 is $32,000, right? Then I have to pay payroll tax on the 32, 15%. That's $4,800 versus the $12,000 on the other side. Does everybody see that?
Yeah.
And my net salary, this would be what's on your W-2. The 32 would be your wages, your 4,800 would be broken down into your FICA and other stuff, and your net wage would be $27,200. However, look to the left, we still have 60% of that initial profit. Now that's coming out as a dividend. Corporations pay dividends to their stockholders, shareholders. You are the shareholder. Assuming you don't have anybody else involved with the company, you're the 100% shareholders. That $48,000 comes straight down. Now it will be taxed, but it won't be payroll taxed. So when you add the 48 and the 27 together, you get 75.2 versus 68. Does everybody see that?
Mm.
That's $7,200 you did not pay in taxes through this. That's $7,200 you get to keep. That's the benefit of a corporation.
Barry, question. How
Yes.
did you decide to pay 40% to your salary? How did you get that number of 40%?
It's, the IRS, this is what my CPA said, you have to pay yourself a reasonable amount, right? So if you make $100,000, what's a reasonable salary for that? And you want to pay yourself, you can't pay yourself $5,000, right? That's not reasonable. but you don't have to pay yourself $80,000. So you want to keep that somewhere between 30 and 40%.
Okay.
All right, if you pay yourself too little, they're going to come after you at some point and say, hey, you've been, you know, you're not putting enough into the payroll system.
Okay, because
If you pay yourself more, they may, I don't know what they may do, but the whole point here is you want to be able to minimize that payroll tax. Because when you
Yeah.
file a tax return, and you'll file a business tax return, if you're on the right side with no corporation, 100% of that is going to show up on your W-2 as income, and 100% of that is going to be taxed for payroll.
okay.
So, you know, when somebody says to you or says to me, how much money do you make? I say it's a hard question to answer. You want to know what's my salary? Well, my salary is $32,000. Well, that doesn't sound very profitable. Yeah, okay, whatever. I made 75, you know, but that's my salary, okay?
Hmm.
And you can adjust the salary as you need, right? Yeah, because imagine now double these numbers, right? You have a good year, you make 200. That $7,200 difference is now $14,200,
Mhm.
$14,400.
Cool.
It's not exactly, but for this argument, we're going to do that because there is a cap on how much you pay on payroll, but I don't remember what the number is. It's somewhere around 150 in payroll. All right, does this make sense to everybody? Does everybody get this?
Yeah.
Okay. The rest of you, what, just passed out because of what I just told you?
I got you.
Gotcha.
Sounds good.
So keep this in mind. Now, when does it start making sense to do this? There are additional, when you become a corporation, you have to file quarterly tax returns or quarterly tax payments. There's more work to this and there's more expense to it. And again, if you have a CPA like I do, they do it for you, but I would tell you, you need to be making at least $50,000, $60,000 in gross commission before it makes real sense to go to the S corp. If you're making less than that, you're just not going to really save a lot of money, and the effort is going to be more. You're going to have to still go through and have some expenses. But that doesn't mean you can't file and have a corporation sitting on the side. Now, here's another thing that's important. If you have a corporation, even an LLC, the brokerage, Keller Williams, must pay that company. You cannot receive money in your name. So every check has to be made out to ABC Realty, whatever your name of your company is. Okay, so if you have a corporation, you're still getting checks as Barry Wolford, you're doing nothing. Because the corporation is not earning any money. Make sense?
Yeah.
I have a question.
Okay.
At what point in a year do you need to decide which way you're going to file? Because being realtors, we don't know sometimes, you know, if we're going to make 200,000 or 25,000. And so when do we have to decide if we're going to file under an S corp for that particular year?
So there's a whole other class you need to take if you're not sure if you're making 25,000 or 200,000. But
Well, I know, you know, by into the year, but
so
prior.
once you've started to make $50,000, $60,000, you should just run it as a corporation. Now, if you're in a particular year where you just didn't make a lot of money, then you know that's just you're going to just suck it up. But once you start filing as a corporation, you really don't want to go back. In fact, you're still going to have to file a tax return even if you didn't put any money through the corporation. Okay, because you have to file tax returns. It has its own tax ID. So I would tell you that, I mean, like I said, if you're starting out and you're like, hey, I don't know what I'm going to make, and you know, my goal this year is 50, but I'm only at 30, you know, then I say, you know, just get ready. But you know, you could have a last quarter and make 30,000, and all of a sudden you're at 60. And even if you didn't Well, this is where you need a tax person. If the money beginning in the year was paid to you as an individual, you're not gonna be able to run that through the corporation. So what I would probably do is say, starting January 1, I want to have all my money run through the corporation. I mean, you want to think positively that you're going to grow your business. Okay? Now, a couple other things. You want to make sure, remember we said, save for taxes on every check, put money aside for your expenses. So and you'll start to get a feel for what your expenses are. You already know certain things, your Supra, your Keller Williams, your whatever, I guess, what?
The gas.
We'll talk about gas in a second, but let's just say gas.
Okay.
You know you're gonna have a certain number of expenses every month, and that's $800, $1,000, whatever it is. So, start working on that. As you grow your business and you add expenses, which you will, because you'll have marketing and other things and blah, 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 you will, you wanna make sure you have that reserve. 3 months minimum, 6 months preferably. That'll get you through some tough times. Now, at the end of the year, if you go, I had a great year and I didn't really need all this reserves, well, you have the choice to distribute it. You can pay yourself, dividend yourself, or dividend and salary yourself more money. But you don't want to start the year in January at 0, because what if January is a sucky month, right? So, okay. All right, let's go to, I know these are small. I want to show you though, can you all see this, or is it really small?
We can zoom it.
Okay, good, because I don't know if I can. All right, this is an example in Quicken of how I account for a commission check. So you'll see you have the main line, and then you have, I don't know if the little arrow shows up, but you have the broken down numbers, right? Right. So the first line is the gross commission, whatever that says, 17,000 and change. Then I had, in this example, we paid $15 to KW Cares. So I have a line item for that. I put that in. Then I had $300 go to my transaction coordinator. Then I had, and this would be all on my DA, right? My distribution authorization. Then I had $690 some odd for FMLS, because that's a business expense. And then I had, and then I had $4,000 go to Keller Williams to pay into my cap. And my net from that $17,000 check was $12,300 and whatever it is. Does everybody see that?
Yeah.
Okay, so that $12,000 is what actually goes into my company, my S Corp. That's my gross, or it's my net commission on that deal. Now, if I didn't have anything else for the rest of that month or year, I would be running my numbers off of that. 30%, 40% would be payroll, 60% would be dividend, 15% taxes on that. You see what I'm saying? So that's how every one of your commissions should look. It should reflect the DA exactly as you have it. Every item that you pay something out to is assigned a category. Okay? And then, so here you can see in this example that top line is just that same thing just collapsed into one line, right? I had $12,384 in that commission check. Then I moved $3,000 to my holding account. Okay? Make sense?
Mm-hmm.
I had another commission on the 15th. I moved another $2,500 to my holding account. On the 16th, all right, in this particular example, this is where we paid ourselves. So I have a partner, so we we both get paid. So we had 14,344, I'm pointing to the screen, Liz, if you can see me. $14,344 balance in the account. Does everybody see that number?
Mm-hmm.
And we each got paid $7,000. That went from the S Corp. I'm sorry. That got paid. That was the money the S Corp received. We actually have an LLC above this, so that's who the LLC is paying the S Corp. That's not important. So in the month of January, I got $7,000 coming into my company. Of that, I'm going to do the 40-60 split, pay my payroll, get my dividend, right? And then I'm going to take money out for me personally. I'm going to transfer whatever I want to my personal account. Okay? Then you can see after that, we had some more income. It just, the pattern repeats itself, right? Commission, put money aside, end of the month, we paid. Yeah, question? Now we pay ourselves monthly. You can pay yourself after every check if you want. You can do it you can pay yourself as often as you want. We just do it monthly. Does this make sense?
Mm-hmm.
Okay.
Yes.
Now you can also see that line item, the 128.19 check 1100, that went to my CPA. The $50 because he does my quarterly returns. So I had to pay him, you know, he did my quarterly return, that would have been for December last year, the previous year. And then I paid him, you know, he invoiced me and I did that. And again, every line item that I have is in this. So that you get this at the end of the year, month, quarter, whatever you want, a P&L statement. What's P&L?
Profit and loss.
Okay. You want to avoid the L. Right, so again, in this example, and we have it broken down, we have listing commission, we have buyer commission, we have referral commission, we have rental commission, we have some other marketing type of income that we get, and then we have our gross income. Then we have all the expenses we pay out, KW royalties, KW cap, referral fees, FMLS fees. And that 61,200 line, the 224 is actually the money. Now this is the LLC, but it doesn't matter. That's actually the money that we made. That's the profit of the gross profit on the LLC, in my case. Then we pay other stuff out of that, right? And it just goes down and down and down and down and down. But you see that every line here, every item we pay off has a line item. Because you want to know what's a monthly consistent thing. Well, I mean, like photos on a listing is not consistent. We may have a listing one month, we may not. We may have 5, we may not. Lockbox rentals, those are, you know, whatever it is, you know, the super key, that's going to happen every month, etc. That's what your Quicken QuickBooks should be doing. If you're not getting this, then there's no reason to do this. Because then you want to start looking at this year to year, and this is how you budget. Okay, what are we going to make next year? What's going to go up? Well, you know, Supra hasn't gone up, so that'll be the same amount. My cap is the same. You know, oh, my marketing, you know, my photo guy raised his rates. You know, my other thing happened. Whatever. Right. So I start to use this to look at trends. I look at this for, you know, how am I going to project where I'm going to finish? Make sense?
Mm-hmm.
All right. Let's talk about a couple of things. So, Lynn, you brought up gas. All right. Your car is a very important part of your business. Now, you can track expenses for your automobile 2 ways. You can do it with actual expenses, right? or you can do mileage. Now, if you actually track your actual expenses, you have to segregate, you have to come up with what is personal and what is business. So if you fill up your tank for $50, how much of that tank was business, how much of that was personal? To me, that's a big pain in the ass, okay? But if you can come up with a percentage, you can do it that way. At this point, I'm going to tell you that the IRS this year is giving you 65.5 cents a mile. Mileage is a lot easier and cleaner to track. There's an app that you can download called Mile IQ, M-I-L-E-I-Q. I think it's $50 a year. I've been using it for the last 3-4 years.
I use it. It's awesome.
Yep,
I use it and love it.
great. Every drive that you make, it tracks. And then you just swipe left for business and right for personal. And it will track the mileage. And at the end of the month, you just hit send me a summary report, and it'll show you business miles, 500. And you just keep track of that. You send it to your CPA or you track it in your own spreadsheet, and you get 65.5 cents for every business mile. Very easy to use. And when I first started doing, I've been doing this 20 years, it was like 29 cents a mile. Of course, gas was about $1.50. But, at 65 cents a mile, it's not bad. I mean, if you do 1,000 miles in a month, which is not a lot of mileage for business these days, that's $650 in write-off. It's $1,800. I mean, that's what is that? That's $7,200 a year. Comes right off. All right. Let's talk about another thing. Once you get kind of going in business, this is a little on the side, but I recommend that you all go and get an umbrella liability policy. They're cheap. And, like an umbrella, you only need it when it's raining. But you can get $1 million umbrella policy for probably under $300 a year. When you are an LLC, or even a corporation, don't think like you're bulletproof protected. You have minimal protection. Somebody you have somebody in your car, and you're driving, you get into a car accident, something happens, whatever. We're in our car too much, in Atlanta especially, where stuff can happen. And in my opinion, $300 a year is well worth having $1 million policy. That's another little piece of advice. All right. What questions do we have? That kind of covers the basics here of business, setting up your business finances. Questions? Excellent.
You've covered all the questions, Barry.
Look back here. So this is probably the most important thing for you to understand is this commission waterfall. Okay? If you're an LLC and you're not an S Corp, it really doesn't make a difference that you're an LLC. So that's the number one thing. If you're an LLC and your money's not being written to you as an LLC, then you're not using it. So you go to Melissa here in the market center and you say, I want all my checks from now on to be cut to my LLC name, my S Corp name, and I want all my expenses billed to my corporate credit card.
Do you file for an S Corp through the same way you do your LLC?
Yes, you go to the Georgia Secretary of State website, create your corporation. There's it takes like 30 days for the corporation, I think, to get approved or whatever. This has been a long time, so don't take me on this, but you can't elect an S Corp immediately. You have to wait like 2 or 3 weeks for some reason, I don't remember, but you can form the corporation, Rubber Ducky Real Estate, Inc., and that's what you are, you're Inc., Incorporated. And then 3 weeks or 2 weeks later, or whatever the time frame is, you go back and I'm sure it's on the website, and you elect that to be an S corporation. And then you tell your tax guy, I am now an S corporation. You will, okay, here's what else you need to know. Good stuff and remember. Not only do you have to do that, then you have to go to the Georgia Department of Revenue. And you need to get a Georgia Department of Revenue corporate number for your state taxes on the company. And then you have to go to the Georgia Department of Labor and get a Georgia Department of Labor number. There are 3 forms that you file when you do your taxes. Most of us in the beginning, unless you're making a lot of money or you happen to make a lot of money in a quarter, are able to file quarterly. Which means usually, like today is the 2nd, I'm gonna send my CPA my spreadsheet today. I think it's, he has to make, certain taxes have to be paid by the 15th, I think the federal and the state has to be paid by the 30th of the month. And that's for all of last quarter. However, you will pay your federal taxes, that's called a 941 form. You don't have to know this, but just so you know it. That's the form that they fill out or you fill out. I used to do it myself, but I stopped doing it several years ago. The 941 is your quarterly tax. Then you do a G7, which is the Georgia Department of Revenue corporate tax form, which is filed electronically. And then you fill out a DOL 4, I think it is, which is Georgia Department of Labor. That's what shows your FICA and everything. That's how they track what you paid in. You also have to pay into the Georgia unemployment insurance because you are a corporation and you have an employee yourself. Now, in the beginning, it's not a lot of money. It might be $50 a year.
Do all 3 of those forms get filed quarterly?
Yes. And at the end of the year, or in January, you'll also file a Georgia 940 form, which I can't remember what that's for, some BS form. I don't know, it's like $42 for the year, but it's another form. And again, this is why you want a CPA who knows what they're doing. I just say to my guy, and you want them to generate a W-2 for you. And you want to, because here's the thing, the rest of the world doesn't know that you're self-employed and they don't care. You want to go apply for a car loan or for something and they want to see your income, you can't turn them over. You can't, it's very difficult to give them a business tax return. You need a W-2, which shows your income. I mean, if you were going to go for a mortgage, right? Well, this is what we do. And your client said to you, well, my W-2 only shows $30,000 in income. You'd be like, shit, you can't buy this $500,000 house. But the lender knows to look, okay, well, what other income do they have? Well, they have $70,000 in dividends, right? So you want your CPA to be able to give you a W-2 that you just keep a copy of. And then, of course, you have your corporate tax returns. So in my world, I have a LLC tax return, an S corporation tax return, and a personal tax return. Now, I have an LLC because I have a partnership. You guys, 99.9% of you are not going to have that. Make sense?
Yes,
Yep.
thank you.
Yes.
Okay.
Yeah.
So that's what I got. Anything else?
That was very helpful. Very informative. Thank you.
Yes.
Welcome.
Thank you.
Guys, if you're making the money, make it happen now. You can still do it for the last quarter of the year. Right? What I would do if you're not a corporation, or even if you are, I just did this morning. You know, go back, look, how am I running on my taxes? So what I do, I'll tell you this, you know, when I'm making money, we're in the 4th quarter, probably around December, I'll send it. There's a point at which, and it all depends on how you do it. I tend to overpay taxes. That's my comfort zone, not advice. I like getting a check in April. It's like a present for me, in the spring. But in December, I send an email to my CPA and I'll say to him, okay, here's my income through the first 11 months. Here's what I've paid in taxes. Do I need to pay any more? And he'll run the numbers for me and say, you know what, you've paid enough. And then I don't have to pay taxes in December, right? Because I've put enough in. Because there's also minimum requirements. You have to put at least like 90% in of what you owe, or at least as much as the previous year. In other words, you can't shortchange the government for the entire year and just say, well, I'll pay it all in April 15th. They will penalize you. Now again, that's what your CPA is for. Okay, but just so you know, whatever little wheels are going on in your head about how you can go around this, there's a prison sentence tied to that little wheel. But he can say to me, look, you made X and you put in Y. I wouldn't put it, you're gonna get money back at this point. So, and I'll be like, cool. And then I don't have to put the $3,000 or $4,000. I can just take that home. Of course, if he says to me, you're short, then I gotta put more of my commission into taxes. Somebody have a question around that?
Yeah. So Barry, based on what you said, I went to the website to find out what am I registered under.
Right.
So I put in my business name, and when I put under the business type, it comes as domestic LLC.
Okay.
So when you say whether it's an S corp or not, where exactly? So does this mean it's not an S corp?
You'd have to look and see. Let me see if I can do this. Hold on. I'm going to attempt to do this. Hang on a second. If you haven't been filing that way, chances are you're not.
It's going to be my first year.
Okay. So, can you all see this page that I'm looking at right now? Can you see what I'm doing?
The Gmail account, right?
No. I have the Georgia Secretary of State page up. Can you not see that?
No.
I don't know what I'm doing here. Hold on. We're in the lead gen. Can you see this?
No. If you go back down to share screen, you might have to select a different screen to share.
Oh, do you know where that is?
It's at the very bottom where it says the chat and participants and everything on Zoom.
I see your email page is what I see
No, that's not what I'm looking for.
under Gmail.
I don't know. I'm not. Hold on. Display on another screen. Sources. Cast screen. Did that do anything?
No.
Nope.
All right. Hang on one second. Let me see. So if you all go to the Georgia Secretary of State website, that's where I am, and I'm just. There's a business tab at the top.
Yep.
So create a domestic entity is one option. And then it says, if you see that, select a business structure, register a domestic corporation. Just looking here.
So basically, I found out what I was when I clicked on search for a business.
There's what?
I found out what my business is registered under when I clicked under search for a business and I put my name in there, the business name, and that's where it came up.
All All right, hang on, I'm just looking to see if I can figure this out. Let's see, all divisions. Business, search. Register S corp. Okay. That didn't work. Well, I'll tell you, they don't really make it easy. And your CPA may be able to help you with this.
Yeah.
You know, how to register online entity, expedite. I'm just looking, see if I can help you, but go to page. So I don't really see where you can do it, but if you, let me try one other thing, just to see something. See if I can find mine and see what it says. Search. So mine. Mine says domestic profit corporation. It doesn't say here whether it's S or not.
Yeah, so mine is domestic LLC.
Okay, I would call the Secretary of State
Mm-hmm.
and just ask them and just say, you know, hey, I just don't remember. I mean, this was over 20 years ago for me. So, but can you still hear me?
Yes.
Okay. Oh, now I see where share screen is, but anyway, that's besides the point. So anyway, you want to check, and you know, I would call the Secretary of State office and just verify. And if they say no, then you know, ask them how to elect it. It's not difficult to do. You just have to make sure that you are. But again, an LLC really doesn't provide you anything. And if you're not incorporated in the S form, you know, then you're getting no tax benefit to this whole process.
Perfect. So your suggestion is changing the LLC into the S corp.
Yeah, you can keep it as an LLC. You can have an LLC in the form of an S corp. So you can keep the LLC, but it's got to be elected as an S corporation from a tax standpoint.
Okay.
You don't have to change. You don't have to get rid of the LLC and change it to something else. I mean, and start a new one. But I believe you have. But you have to make that election. If you don't do an LLC, if you just do a straight corporation, like I said, it could be you know, Vanilla Ice Cream Inc. And you can name it anything you want. It doesn't have to be real estate. Nobody's going to see the name of that corporation except for you and your tax person. It's not how you do in business. My corporation is Hospitality Marketing Group, right? My real estate team is Wolfert and Wren Real Estate Team. Nobody, you know, nobody needs to know that they're the same thing. Okay.
Yes, thank you.
All right, you're welcome. I hope this was helpful, and good luck. And like I said, if you know, get yourself a good CPA. That's really, really, really the key on all of this, and you know, because this is just the basics, right? There's a lot more to it than this. And go and get yourself those bank accounts, and get yourself those tax IDs. So Fatima, you have a tax ID for the LLC, right?
Yes.
So that's and does the brokerage pay you as the LLC?
No, it doesn't. So that's something that I need to change effective January 1st.
Yeah, because then you're not using it.
Yeah.
So, and you can have them do that, starting today.
Actually, you're right. Yeah.
Thank you.
You're welcome. Thanks, guys.
Thanks.
Bye.
Thank
Thank you
you.
for the time
Bye-bye.
you spent preparing in the class.
Okay, bye.
Thank you. Bye-bye.